Correct.
Any odds? I was talking with a couple other traders after the negative reaction that Powell got yesterday. Do you think there is a chance that he maybe adds a little touch of dove to the statement, or is he going to read essentially the exact same?
I don't think that Powell can give anyone any opportunity to sit here and allow this market to scream back to 4,300. Again, we sit here and we have this big conversation about why should the central bank care about what the equity market is doing. If the S&P 500 screams to 4,300, if you see an expansion of multiples, people look at their 401ks, people look at their investments, and they say, hey, I've got more money in the future, so I could spend more now. And if we look at the current state of what's going on with the CPI and the PPI, they're likely going to run hot. You looked at the report from the ADP number this morning. Jobs still strong. People changing their jobs saw 14.5% increases in their pay year over year. You had an uptick of around 7.2% year over year in job growth. That is not sustainable. And you get to these questions from people like Warren, who are saying you're going to lose 2 million people to the payrolls. What do you say to them? Powell answered it correctly. What do I do? Just let 5 to 6% run annually, completely throw off the private markets and effectively make it worse for everybody? It is a very delicate balance for what the central bank needs to do. It's very, very difficult. It's very, very hard. I would have lost my mind yesterday if I were Powell, and I would have said to Warren, if you guys hadn't spent $5 trillion in the last year and a half, maybe we wouldn't be in this situation. But again, I have a little less tact when it comes to the Senate than the rules of engagement. And the other element of it is just, looking at what Powell has to do and how he has to do it. You have to stick to the guns, and you have to maintain this market. Again, if you look at what happens historically, the Fed will ultimately pivot. It will likely end up breaking something. I don't know what that will be. But in the end, when it all comes down to what needs to be done, the central bank is backed into a corner. And as Powell said, we only have two tools that we can use in order to reduce inflation. And that is raising interest rates and cutting the balance sheet. They don't have tools built around spending. They have no oversight on what Congress is doing. And they have no insight into the supply side, which continues to be a serious problem in energy, food, and housing, the three major components that continue to move higher over the long term because, again, bad policy.
Yeah, I mean, where's the end game here is what I think a lot of people wonder. I
can tell you, but you're not going to want to hear it.
Yeah, no, I listen, Garrett. If you're saying it, I want to hear it.
The end game is $50 trillion in U.S. debt by the end of the decade. It is effectively more financialization in order to paper over debt. And as you see more AI and more technology incorporate the U.S. economy, we are not going to get deflation in this economy. The central banks hate deflation. Americans hate the fact when their nominal wages and the value of their houses go down, even if their cost of living increases due to the deflationary impact. So what does the Federal Reserve do? It papers over the deflation with more debt because the debt system needs more debt. It builds, it compounds, and it moves exponentially. So when I listen to Warren say, or to Yellen say, we want to focus on climate change, I don't hear we need to fight climate change. I hear we need a reason to spend more money, because that is what the debt system requires. So the idea of more infrastructure built around the green economy, it gives justification to expand the debt capacity of the United States and take us to $50 trillion, $55 trillion, and then tell everybody that we're saving the world in the process.